From FXEmpire, this is Chris taking a look at the dollar against the Japanese yen. The dollar initially rallied a bit during the Wednesday session against the Japanese yen, as it looks like we are trying to form some type of basing pattern. It's worth noting that the uptrend line underneath continues to hold, and the 141 yen level seems to be a bit of a barrier. I anticipate that the 200-day EMA above could be a little bit of a barrier as well, so the upside might be somewhat limited in the short term, but longer term, whether or not we break above there probably comes down to the bond market more than anything else. So with that, we need to pay close attention to the 10-year yield, as it has such a huge influence on this pair. Breaking above the 10-year yield opens up the possibility of a move to the 145 yen level, which would be the next barrier, and where the 50-day EMA is currently trying to get to. Clearing all of that would mean that the market is ready to rip higher again in a longer-term buy and hold type of scenario. Either way, I think this is a pair that is probably going to be very noisy, but that's nothing new for this market. And you have to keep in mind that the jobs number on Friday is certainly going to have its influence as well. The dollar-yen pair tends to be very noisy during that announcement and shortly afterwards, so I think it does set up for a certain amount of volatility. You're going to have to be able to ride through a lot of noise to collect profit. If we turn around and break down below the 141 yen level, maybe even the 140 yen level, then this pair falls apart and we probably end up down to the 135 yen level quicker than most people anticipate. As things stand right now, though, it looks like we are trying to hold support from a longer term perspective.